What is going on, Future Focus family? My name is George and I make videos to help you make money investing. Today, I'm going to be talking about a company I talk about a lot on this channel, Paysafe, ticker symbol PSFE. Yesterday, the stock closed up 7% and after hours, it went up another 1%, which is out of the ordinary because year to date, this stock is down 26%. This stock, along with a lot of other companies that were SPACs, have been getting crushed lately. But yesterday, we received some bullish news from this company. Let's get right into it. Paysafe stock. What to know as David Tepper sends Paysafe soaring. Form 13F filing season is always interesting to watch. Indeed, investors in Paysafe and Paysafe stock are in a good mood today, and for good reason. For those of you watching this who's never heard of a 13F, a 13F is simply an SEC form that needs to be filed quarterly for institutional investors who are handling over $100 million in securities. These managers have 45 days after the quarter ends to report everything they bought and sold throughout the quarter. Via yesterday's 13F filings, we saw that Appaloosa added a new position in Paysafe stock. David Tepper's fund is one of the top funds watched closely by investors. Indeed, Mr. Tepper's investment track record makes Appaloosa a key focal point for the value and growth investors alike. Today, shares of Paysafe are up nearly 9% at the time of writing. It appears the market is viewing this stock very favorably. The investment in Paysafe stock is notable for key reasons. The first is that Paysafe has been on a slow and steady decline in recent months. Since hitting a high of nearly $20 per share earlier this year, Paysafe stock has declined substantially. Today, post-rise investors can still pick up shares of Paysafe stock for around $12 per share. This is meaningful because, according to Appaloosa's filing, the company acquires shares of Paysafe stock at around the $13.50 level. The company's holding accounted for roughly 2% of the fund's total assets. Thus, Paysafe appears to be a meaningful yet small portfolio addition. Speculation that this stock could be added on weakness may be at play with today's rise. Additionally, it appears Paysafe was one of the few high growth additions to Mr. Tepper's portfolio. His sale of other high growth stocks during this time frame makes Paysafe stand out. Accordingly, it appears investors are taking note today. Some of the companies that David Tepper sold were Alphabet, Amazon, and Apple. With all the 13Fs that were released, it was evident that it was more than just this one fund that was interested in Paysafe. Major holders that have opened the new position in Paysafe include Blackstone Group, Fidelity National Financial, Cannae Holdings, Third Point LLC, Francisco Partners Management, Cerverta Capital Management, Appaloosa, which we talked about, Wells Fargo, Naya Capital, on and on and on. This page shows changes in ownership structure by listing institutions, funds, and major shareholders that have increased their holdings or opened new positions in the last reporting period. Here you see all the 13Fs that have been submitted. These were submitted on the 18th. These were submitted on the 17th. As you go down, some were submitted on the 14th. But as you can see, a lot of institutional investors are getting very excited about this company. In the long run, Paysafe was well positioned to benefit from the explosive growth of iGaming, and this firm has a history of success, something that most SPAC targets cannot boast. Paysafe's digital wallet, Skrill, is particularly impressive. The platform is active in over 120 countries and supports 40 different currencies. This business vertical has a huge total available market. Estimates vary, but one report expects the global digital payments industry to increase by 22% over 6.6 trillion in 2021. Based on Paysafe's latest earning report, things are moving in the right direction. Overall, Paysafe has raised $3.6 billion from the merger. That includes $2 billion in PIPE from several institutional investors. At a market cap of $7.86 billion, no one will make the argument that Paysafe stock is cheap or that it's trading on fundamentals. However, it's important to consider the industry in which Paysafe operates. Valuations in the fintech space are astronomical. For example, PayPal and Square, both relatively mature enterprises, are trading at 52 times and 130 times earnings, respectively. As a result, investors are very bullish on digital payment platforms, which leads to outsized valuations. However, the potential is still there, especially for a stock like Paysafe. Paysafe's iGaming segment is active in over 50 markets with customers like Epic Games, Fortnite, Roblox, Amazon's Twitch, and DraftKings. Finally, Paysafe's point-of-sale e-commerce solutions allow merchants to accept payments across the US, Canada, and Europe. Paysafe will only grow from here. Paysafe is one of the most exciting companies in the iGaming space. It is focusing on the high-growth areas that will increase substantially in the years to come. Investors who are skeptical of pouring capital into the SPAC space can rest easy. Revenues are rising, gross margins are good, and the business model is asset light. The industry will grow significantly in the next decade, and it is trading at a discount to its peers. After all that news, all I can say is what's not to like about the prospects of this company. It's in a space that I have no doubt will thrive. And at $12 a share, why not? I personally own 1,000 shares of this company, and on the next red day, I will be buying more shares. But I want to know what you guys think. Are you guys bullish on this company, or would you rather invest your money in PayPal or Square? Let us know in the comments below. As always, invest in me and press that like button, invest in yourself, and smash that subscribe button. It costs you nothing. Until next time.